Welcome to Expiry Special Level 1 strategy, and now we are going to take the knowledge of RSI, what we learned in the last video, to the next level by using how to use this Expiry Special strategy in real market, right? Start looking at the market on Wednesday, one day before the expiry, which is look at the current market price, which is 11,000, and look at the money option, which is call also and put also, right? And you have to look at 15-minute chart, 15-minute chart of call, 15-minute chart of put. Remember, it's the call chart and the put chart, not the Nifty chart or the Bank Nifty chart, okay? And plot RSI on that. And once it crosses 60, like in this case, we have taken example of 11,000 call and put of July 2019. So let's look at this one. Now, the data on the other side is not important. Look at this one, which is important. Let's say this is the 15-minute chart of any option on any day. Let's take not even expiry day. The moment it crosses 60, that means the underlying means the index, which is Nifty or Bank Nifty, is showing strength. It's showing momentum. If the call goes up, that means the markets are going bullish. If the put goes up, if the markets are going down. So in both the cases, you're going to be a buyer of an option. Remember, Bank Nifty, let's say Bank Nifty goes up, you buy a call when it goes above 60. Bank Nifty goes down, you buy a put, because there also the RSI will go above 60. And also make sure that it's never going to happen that both will go up, call or put, both cannot go up. So it's a very, very simple solution. You can put any software which you use. The details of the stock softwares also will be given to you in a separate instructional video where you can see the options chart if you are in India. So where you put the call chart and put chart together in front of the screen and at the money option, and the moment it triggers above 60, then you see that candle which plots above 60 is called the alert candle or the alert bar. That means that the strategy has triggered, right? So when RSI crosses 60, the first candle which crosses 60 is called the alert candle. This is on 15-minute chart, right? Above the high of the alert candle is your entry. Below the low of the alert candle is your stop loss, right? Remember, that's your initial entry and stop losses are clear. Entry, this already marked here. Make sure you take down notes, draw all this if possible, rather than taking snapshots as some of you are doing it. So let's see now. I'm going to put that into a slide form, alert bar. So this is the strategy. Buy above the alert bar. Target is also given. Let's say the alert bar size is 50 points. So your target on the top means, let's say you buy an option for 150 rupees, let's say Bank Nifty, and the alert bar candle is 50 rupees. So out of 150, 50 rupees is the size of the alert candle. That means the first target is also going to be 50 rupees. So your first target would be 200, and then the second target would be 250, and the third target would be 300. So 50, 50, 50. One target, two target, three target. Size of the alert bar 1, size of the alert bar 2, size of the alert bar into 3. That's your 3 targets. So this is basically system 1, level 1, expiry special. I know there are more levels and you're going to learn all of them, but I want you to get started with this one as soon as possible so you start making money. And then we go into the next level in the next class as per the schedule, where we are going to use that. How do we add more quantity, pyramid? How do we change the time frame from 15 minutes to 5 minutes? How do we add Bollinger Band into the sequence, and all that thing will happen. But right now, this is your basic level. And the stop loss is absolute low of the alert bar. Absolute low means the low of the last candle which you saw here. This is the low, which is your stop loss, right? Right. So now let's take this chart. So this here is alert candle, first one 9:15, and it crosses, that's your entry. Stop loss would be the low of this, and your let's say the length of this is 50 rupees. So at 50 rupees, one target, two target, and maybe three targets. Now let's say if the target is not achieved, what do you do? If it goes to one target and two target, what do? We can trail the stop losses. Now when do we trail the stop loss? The ideal way to trail the stop loss is by doing candle by candle. Means every candle low is a stop loss. Now in this, you need to make sure that you don't consider small candle low. You only take big candle low as your stop loss. So let's say you entered about this, at that time the stop loss is below this green candle. Then this is the next big candle, right? So below that is your trailing stop loss. Next big candle, below that, next big candle, below that. And in between, if you get the targets also, 50 rupees, 50 rupees, 50 rupees, exit, 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 right? So that way you are booking profit. Initially, I'm teaching you how to make some money quickly from the market, and then we will talk about how to pyramid and how to take the trade forward and how to make more money and how to go from 6 figures to 7 figures and maybe possibly 8 figures, as some of you have done it, right? So I hope you are understanding. One way entry, I'm repeating again and again because this is the crux of the strategy. Above the high is entry, below the low is a stop loss. Alert bar size is your target, 1, 2 and 3. Once you hit one target, exit. Once you hit second target, you exit. Once you hit third target, you exit and make that money. Now, how do you trail the stop loss? Every candle, big candle low. So here this big, this big, this big. Then this a small candle, it broke the low, but it was a small candle low. So then I can take this big as a low stop loss. Then I can take this big as a low stop loss. Then I can take this as a low stop loss. And finally it got stopped out here on this around 650 levels. Look at where we entered around 250 levels. We exited around 650 levels. If you just keep trailing. So if you want to go one step forward, what you can do is, let's book one profit as per alert bar size 1, second profit as per alert bar size 2, and third, instead of booking at 3 times the alert bar, let's keep trailing as long as you go. Actually, I just went ahead of the schedule or ahead of the syllabus actually, that you're supposed to do in the system 2 and level 2 and level 3, but I'm just giving you an advanced hit because the way markets are especially volatile nowadays, you can take advantage of the third quantity. You can keep trailing as long as you want so that you make big money on that, right? I hope it's very clear. Look at these charts, and now, as I mentioned in the first do's and don'ts, it's about more practice, 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 and more practice. The more you do it, the more you learn it. Start with only one lot. That is also enough. One lot, and especially if you do Bank Nifty, 20 shares, as we are doing in 2020. 2020 is the lot size. So that's very, very simple. So again, one alert bar, look at the alert bar size here and keep trailing the stop loss as we go ahead. Now this one is Nifty, which is on the first candle itself, there's a alert bar. Now look at this. This is very important. Small thing makes a big difference. The next red candle did not cross the high of the previous bar, right? And the third also did not cross. Then finally it crossed. That's when you are going to enter the quantity. If you do 3 lots, then put the stop loss below the low of the alert candle, and then there are small candles, and then we hit first target, second target, third target. Now third, you can keep trailing as long as you want as per the big candle low stop loss I explained. The big candle low got actually triggered on this candle, and then you would have been out. Now sometimes, because you are using system 1 or level 1 right now, you may miss some part of the trend. So you got out here, you entered here, and you got out here as per the candle low. But as we learn into level 2 and 3, we'll also use how to capture all this movement also in the enter. There can be re-entry into the market. There can be sometimes you have to get out and get in also. So we don't know how this move is going to be. It can go in one shot like this, candle, or it can go up and down and then up and down. So that means you can get out and then get in, and then get out and then get in. Sometimes it happens. Or you can get out on certain quantity but stay with some quantity, and maybe you can use this 20 moving average as your stop loss. You can use 60 as your stop loss. All this I'm going to cover. So, and then let's look at more examples and get more tuned to looking at RSI in the way it should be. RSI about 60 and buy alert candle. Now look at this one additional thing I want to tell you. Sometimes when you get an entry like this, then it comes down. Now see, it did not break the low of the alert bar, so that means I'm not stopped out, but it did a very, very small called 60 support and then formed another green candle. So I can do a pyramiding here, or I can add one more lot here, because now it has reconfirmed that I am not going down. As if is market not going above 60 means not bullish, but market not going below 60 means extremely bullish. So I would add more positions and then see it jammed up, again went sideways. And this is, now that comes to the next question. Look at this. This is the end of the day. Market close around 3:30. Now, should we carry forward the position on the next day if you are making money? Yes. If you are not making money, no. So expiry special is only for the day, intraday only. But if you are making good money, then you can carry some portion of your trading strategy or some portion of your trading quantity the next day. Because in this case, it worked out well. It gapped up and moved up again. But sometimes if it gaps down, then you may lose money. So we don't want to take overnight risk in expiry special strategy, and especially when you are break even or losing money. So if you are enter and the market closes flat, you exit. If it market closes lower than you but still does not hit your stop loss, still you exit. But market goes well in your favor and closes right on the top of it, that means you are making good amount of money. You may choose to carry like 50% or 75% of your position depending on how much money in the money, so that you don't lose it if it opens down, right? So overnight position only and only when you are deep in the money. That's the only reason you can carry this position. I hope you're learning. Next chart is, again, you look at this one. It looks the same chart, I guess. No, this is different. Let's do one more. That's an enter. There's an alert candle here, and above that buy, and here you got some consolidation, and then again up. Now in this move, I know you might not have been able to exit the whole, you might not be able to capture the whole movement, and especially if it is going around 3-4 days. See, this is the one day, means 25th June, 26th June, 27th June. But I will teach you how to capture this also as we go forward in the next strategies in the next few sessions. So hold on to that. It will come step by step. But at least for the day, you can capture this moment. Next day, now next day it is already above 60. See, this the whole day is above 60. So can we buy? Ideally, we want the market to go from below to above 60. So in this case, if you notice this particular candle, which goes above below 60 and comes back again, that could be a re-entry on next day and make this money. But on the third day, here specifically, you can't enter because it's already above 60 on this day. Maybe at this time, you're already trading higher. So at this time, you can change the strike price. See, we are looking at 31,500 call on this day because that was at the money on this day. But at this day, it might be 31,700 or 31,800 here. So that time we will look at that strike price and that 60 cross, then we can get a good trade in this, right? I know it's a lot. Some of you might be new to this and you might not get what I'm talking at the first go, but that's the advantage of this online program. And you can watch this video again and again, right? So I hope it's serving you well. So let's keep going into this. Here, the same example, you buy, make some profit, exit. Next day, it takes support on 60, you have another entry possible, right? And the whole day, it goes sideways, you might have exited, again, re-entry on 60 support. So the crux is, what I haven't taught you in some other free sessions or free webinars or free videos is that not only above crossing 60 is a buy, but taking support on 60 is also a buy, and especially when the trend is continuing like this in the next 3 days. So that's this small nuggets. I hope you add value to all this, and this will help you to not only make more money, pyramid also, and hold on to your position or re-enter your position if you get out of the market, right? So it's actually very similar to how we trade general market also. This is now the best part about options mastery. You know what? I used to have a separate program called Start Trader program, which we are not doing except once in 2020, is where I teach all about RSI, which I know. And I just shifted that program only for my 10x student. But the beauty of option mastery is, you know what, because I have to teach you RSI, expiry special, and expiry special depends on RSI. I have to teach you RSI also. So some part of, or some major part of my star concepts are also covered here, which will not only help you to trade options the way I'm showing you, but the same thing you can use for stocks, the same thing you can use for equity, same thing you can use for currency, commodity, same thing you can use on hourly chart and a daily chart and a weekly chart and a monthly chart. That means whenever our hourly chart takes support on 60 or a weekly chart takes support on 60 or a monthly chart takes support on 60, you can still make money using that positional trade in cash, commodity, or currency. I hope that's the bonus for this session, right? So it's don't focus only on option. When you understand RSI completely, you can trade anywhere in the world, any damn stock which is plotting RSI. For matter, you can even trade cryptocurrency if you're trading in that part of the world where there is official. I hope it becomes official very soon in India. I guess it is already, but let it get regulated, then we can have one more instrument, one more market to trade. And for us, it's more and more we trade, the more and more instruments we have, that much more opportunity we have. It doesn't matter whether we have a recession like 2008, recession like what we are seeing in 2020 also, but for us, it's an opportunity, right? And this business is recession proof, right? I hope you are all excited about it, right? So this one, again, it's a different way, different stock. Look at this, the way it goes up, amazing. Bank Nifty moved from 20 rupees to 160 rupees in this just one move. Now, when it crosses 60, that's when your buy happens here around this level. And then it goes straight. Here, you would have stopped out once on this 60, on this red candles, but then you can have a re-entry, and then this was slightly messy. So remember one thing. Now, when I say it went from 20 to 160, you're not going to buy at 20 and sell at 160. What you're most likely want, what is your goal? Your goal is to enter and take 60 to 70%, or I would say 50 to 70% of the creep. If you are not satisfied with that, and you say, oh, I could have bought early, I could have sold late, I could have sold at the top, that's not happening. That's not happening. Even people, you must have seen testimonials of people who made 25 lakhs in one day, 1 crore, 5 lakhs, all those. The actual money they were making on that day from the highest point was somewhere around 2 lakh. The highest number I showed you is 1 crore 72 lakhs, but the higher was 260. But then it came down. So it's absolutely okay. Imagine that amount of money you're leaving on the table, but that's a part of the process. That's a part of the system. So focus on the process, not on the profit. That's my favorite quote, and I use that often in my ABCT and other programs. It's a process-driven system. Sometimes you'll make big money. You may take out 80% of the cream out of this. Sometimes you may take 50% of the cream out of this. Depends on how it moves. They move like rocket, you can make more money. But if they go zigzag, like here, if you see at the last part, they are zigzag. So there you might not make that much money, and that's absolutely okay. But if you try to do re-entry again and again and try to be smart, then you will lose all that money which you made here. So just be cool and calm. This happens every single day. There's no hurry to make money every day. There's no hurry to catch every move every day, every pinpoint. Just make some good quality trades. Focus on the process, not on the profit, right? Look at this now. Now I'm changing gears. So when I designed this strategy, I like to use the word when I design, because this very few things I have designed in life, or very few things I have tried to do on my own, because generally my way of doing things is try to model people, try to look at people what they are doing and try to replicate in my doing, because that's they have tried and tested. So why put our brains? Just put your own way of doing it. It's in Hindi they say put your own tadka into it. That's what I did whole my life. But in options specifically, I didn't get that simple system anywhere. So I had to invent it myself, which is expiry special. Now it has become very popular and many people teach and all that. But I've never tried to put it as my proprietary system or trademark or patent and all that. Doesn't matter, because I think market's an ocean and there's lot many things to do, lot many people, lot many students, lot many traders. And even if so many people teach and trade, doesn't make a difference to what you are going to make money. So just be open-hearted with everyone, right? So what I was telling you is that you need to practice this. The more you practice this, the more you get mastery over this. It's not going to happen overnight. Slow and steady. Trade with 1 lot, trade with 2 lots, trade with 3 lots, right? That's how you're going to use this. When I designed this strategy and I named it as expiry special strategy, because I thought the movement happens generally on expiry. But then I realized that movement can happen on Friday also and Monday also. So that means the name is expiry special, but actually it can be used every day whenever there is a big movement possible or it happens. right? So there are most of the crashes in the history of the stock market have happened on Friday and Monday. And I have that famous quote also: a bad Friday is usually followed by bad Monday. And that you must have seen in the past. You go and check any historic crashes, the same sequence has been followed. That means if you had followed expiry special on this Friday and Monday, you would have made a lot of money, right? That means no matter it's an expiry special strategy, you can use it every single day whenever market gives you big movement. And now the next thing I want to tell you is that it's not only applicable to the indices, it is applicable to stocks also. Like I'm showing you a chart of Maruti right now. That's a put, and Maruti went down, and the put went from 50 rupees to 150 rupees in just a matter of 1.5 days, right? And then you look at Tata Motors, a 4 rupee option becomes 8 rupees. At the end of the day, you can exit it. Like here, the entry remains the same, 15-minute chart. At the money option, it can take one or two strike price ahead, aage piche is okay, means let's say the stock price trading at 160, so you can look at 165 call. That's not a bad thing, but too far would be too difficult to trade. So at the money or just one strike price out of the money is okay. So here is a Tata Motors. Now, they may have good movement on the expiry day, or when you have, suppose, let's say Tata Motors is an annual general meeting on particular day, or Reliance has a quarterly result, or auto sales numbers are going to come on the third of the month, or there is FII data, or what do you call DII data, or what is that called? Uh, Banking policy is going to happen on a particular day, then you can even trade in the banking stocks. Or there's some major announcement to happen on State Bank of India, then you know that volatility will be there. So you, instead of doing any other option strategy, you can just plainly do option expiry special strategy on that day of the result, or that day of the quarterly announcement, or the bonus announcement, or whatever it is, right? So this is a universal strategy which you can use for all the stocks as well as indices. And you can also use it not only on the expiry day, you can use it on everyday basis whenever there's an opportunity to trade. Now, based on, if you learn other technical tools like candlesticks, like Bollinger Bands, and like ADX and all that, so then based on those tools, you also know that when a big movement is expected. Let's say when the ADX starts rising, let's say when the Bollinger Band starts widening, or let's say when there are too many small candles, that means after that there'll be a big candle. So if you are expecting a big candle today, so why not trade expiry special strategy, right? In the last 5-6 minutes, if you realize or not, I gave you like lots and lots of nuggets and nuances. So I want you to watch this video again and again and again, so that you can catch hold of each of those things, and then you can implement. If you can capture one good move like this and one trade like this, that will do a whole lot of thing to your confidence. And then slowly you can scale up your journey into options trading, right? I hope you're enjoying this training online. And to be honest, if I tell you, if I were you, whatever you have paid for the program is already worth in this session itself, and you can cover that money by using this strategy, and many of you have done it. But I want you to make more money, and of course we are going to teach you a lot, which is expiry special 2, 3, 4. Then there is ADX based strategy, RSI based strategy, option writing strategy, event special strategy. Of course there'll be pyramiding, of course there'll be risk management, and some additional tools and techniques, and of course some bonuses which you might have got as a part of this program. That's and a lot of support coming your way. So keep enjoying this training, keep watching this video again and again. I hope you enjoyed this option mastery session 1. And let me see if I have more examples. Yes, we have this Canara Bank, which is same 15-minute chart, and look at this, amazing, from 4 rupees odd to 12 rupees in just no time. So how about trading a Canara Bank future? It would be slightly dangerous because you need a margin, plus you take the risk of going up and down. But buying a Canara Bank at a 4 rupee option price, at the most, if it goes wrong, you can sell it at 2 rupees. So 2 rupees is your net loss. But then 4 rupees becomes 12 rupees. That's a huge amount of money to be made, and that too in one single day, right? So look at this Bank Nifty option. Very, very simple. Entered at 67, high of 345. Now, when I say high, it's not written exit at 345. Your exit would have happened around 300 something or 280 something. That means you took the 60%, 70% cream, which I was talking about some time back. So just more and more practice. And I know, as if you're into trading into Indian markets, the Indian option data is not much available. So my request is that now onwards, whatever charts you get, take a snap